Hey, good morning, everyone. Good morning, good morning. Good to see you all today. Welcome to the PivotBoss Premium Trading Room. Today is Wednesday, May 16th, 2018. Happy Hump Day, everyone. We're seeing a little bit of strength here in the ES and the NQ just now, pushing a little higher over the last little while here. For the most part, we've kind of hung in there inside the previous session's range. You can see a very narrow range overall after the major drop, and that's, again, you know, I go based off of how the market tends to react in these types of scenarios, and then from there you can look to see if the market is following those guidelines or if it's doing something different. What we talked about yesterday was a very aggressive sell-off here with a bounce back to value, and I said that that could now become the range for the day. In which case, while you could see new lows, you know, you could continue to see bounces right back to value. And so that was the game yesterday, was buying new lows, returning it to value, buying new lows, returning it to value. Or if you're a bear defending the current move, selling value, returning to lows, selling value, returning to lows, selling value, attempting to push to new lows. And so that became the range for yesterday, and price closed inside that range throughout the day. Here in pre-market trading, we have a little bit of rounded bottom to this market, and then just now we're starting to push through these highs here after the open. So this is fairly bullish in the short-term sense. Breaking through the top of this range is bullish, and if price pulls back into, say, 27.13, 27.14, that could be an opportunity for bulls to defend and stretch it. You could be looking at a move right back to where price sold off yesterday, which is basically between 29 and 31, somewhere in that zone. So right now, with the fact that we had kind of built up some energy yesterday, a little bit of a rounded bottom and breaking through these highs, again, with VWAP trending higher and everything, bulls may look to defend any pullback into this zone for a continuation higher. That could give you about a plus 10 to 15, depending upon how a bullish price turns out. So say from 14 to 29, that would be about a plus 15 there into that zone. So we'll see if we can continue to see strength out of this one here, at least in the short term. I wouldn't really push it far beyond there just yet, but at the very least, I think this zone right here between 29 and 32 could be a high probability target zone by the end of the day, if prices can continue to hold 14s. So that's kind of the early idea here with the ES. If you look at the NQ, you'll see very similar price action yesterday. Again, after the significant sell-off, all of that selling behavior right here, and then we hit a strong low that bounces us back to value. We followed that move and talked about the different things that helped us identify that that could be the one versus this one or this one or that one or that one. Why was this one the one? And we talked about how price pushed back above S3. We talked about how it hit S2 and then continued to climb as VPOC shifted down and then went bid. So all those things helped out. And then we formed this range right here, which again kept prices contained the rest of the session. So again, just going off of basic price action and how it usually behaves in that type of market helped get us in the right, help give us a good framework to being on the right side of the market there. So this right here, another rounded type of bottom, starting to break through those highs here of this pivot right there. So again, a pullback, perhaps into VWAP as low as 6,900. Could be a buying opportunity to return this back to 5-day value. Again, that's the area where price went offered yesterday. That could be about a 69.55. We could even get as high as the previous week's close, which is 69.60. So again, from a pullback point of view here, so that 69 could give us a 69.60 to 69.50. So there could be about a plus 55 to 60 points of action in that move. So that's just something to look out for here short term. With the ES and the NQ, yesterday we were pretty much on it in terms of looking for more weakness. We knew that bears would likely to defend VWAP on the first test, and then we also knew that if we had a strong enough bounce back up, that could set the edge, and it did. So again, working off of this framework suggests more upside back to value if prices can continue to keep 6,900 bid. So that's kind of the short-term idea right now with the ES and the NQ. Looking at crude oil right now, we're still stuck in the range, and this is about a 5-day range here, 5-6 day range where it's super narrow, and we've been quantifying this with the ADR indicator. You can see here this is Wednesday, Thursday, Friday, Monday, Tuesday, and now Wednesday, right, is developing. So clearly very tight price action. Look at the 5-day profile. That's all of the 5-day profile right there. I mean, there's not much range there at all. It's a perfectly balanced D-shaped profile with value right at the center of the range. You can see very clear drop-offs at the edges, and then you have a very tightly compressed chunky value areas. So that's clearly building some energy right here, and that could provide a nice breakout opportunity at some point down the road. Dale's reminding us that we have oil. The inventory is coming out here at 9:30 Central, and that's going to be in about 33 minutes from now, and that's going to be something to watch out for. Again, I think given how strong crude has been so far, I'm not eager to sell this at all. Instead, if it were to break down, I'd be watching for signs of rejection that could slingshot this thing in the opposite direction and push higher through 72s. Remember, 72 is a significant LVN, a composite low volume node in the volume profile, and so far it has been defended hard, just shy of that zone, getting as high as 71.93s, 92s, and you can just see how it's just a big time zone up there. So if we slingshot through that zone and break through 72s, it's open air to about 74.52, our upside target that we've been watching for a while. So again, this one I would not be eager to sell it on a swing basis. There are some short-term selling opportunities during the day, but this has been a very bullish commodity so far. Tension's not easing up really, so to speak. So we could have much more upside in this one overall. And again, any pullback or breakdown, even as low as say 69.76, right? That's the midpoint of last week's range. A breakdown into that zone could be a big time turning point for a return back up and a test of 72 and through it. So right now crude oil is in a very tight range. Obviously we have oil coming out here, inventories pretty soon, and we could coil up ahead of that event. The edges are going to be very important, so fading edges until proven otherwise. Let's see here. So early strength here out of the ES and NQ. So let's go down to a 1,000 now. There we go. Now I wanted to switch gears here real quickly and go to Thinkorswim. We have a really good opportunity here for Wynn Resorts. This one again, so bullish overall. This has been a big time mover to the upside, and then of course you had the Steve Wynn allegations here, which led to a major drop. Things compressed. We got a major rejection tail down here. This is the one I actually traded in a couple of ways, but this one actually this was basically a 160 to a 170 play as a short-term move that I did, and that was actually just a vertical call spread there, and then price ends up gapping up through the 170s and running, and then pulls back and continues to flow higher. So it's almost returned. Well, it has returned all the way back to the point just ahead of where the news came out for this one. Came back into that area, is pulling back now. So you can see nice and stacked and sloped environment here. Every time it pulls back, it's seen a nice buy over the next 2 to 3 weeks. So right here we're seeing that again, where price opened actually at the midpoint, actually just below it, and that's not usually preferred. So I saw that happen this morning, and I was like, I'll wait a sec. But price pulls back a little bit and then starts to climb back above the mid and is actually pushing beyond the previous session's open price, which is pretty strong. So again, this could be an opportunity that develops over the next couple of days, and eventually we're likely pushing back to return to recent highs, maybe getting as high as 205s and beyond. And based off of the current low, we could see a move as high as 207 and be basically average for the month. So overall, this thing is poised for upside behavior. Right now 190. So overall, yeah, I think this one has a good shot here. I also talked about Overstock. Now this is one that, and I'll get to some of the ones that you all are asking about here in the chat, but this one, Overstock, is one that I've been watching for a little while. It's been building up. We've actually talked about it. We've marked it up. But with this one, it's had quite a bit of accumulation here. I think it's had enough accumulation. If you look at it, it's about 7-8 weeks long. 1, 2, 3, 4, 5, 6, 7, building 8 weeks. So 2 months of compression here. Right there at this 34, that is the absorption point here after this rejection below that level. Up top, it's 41.79, very clear level. The 41.79 is the bottom of the key range back here. So this is the bottom of the key range. That's the top. Here's the midpoint. So that's our key range. And price actually traded really well off those zones. There's another key range or two that we could probably mark in here. Maybe this one is actually better now, a newer one, but the market has been trading really nicely off this one. That's why I've kept it. But look at this compression here, a box that's formed just below that key range. And again, if this thing has built up enough accumulation and enough energy in this zone, breaking above that 41.79 opens up a return to the midpoint, like straight away. I'm talking about, and very quickly, 5 to 7 days, if that. And then the potential to see a move back into 65.71, which is the top end of the range. And I think this right here has enough juice to do that very quickly, and could even probably go beyond that, to be quite honest. I mean, we could probably even get all the way back to highs, but I don't want to overshoot this. I just think with a compression like we're seeing here, whenever we do see the breakout, it's probably going to be an aggressive move toward those two targets over the course of a 2 to 3 week period. So again, keep this one on the radar, as it could be a nice explosive opportunity here pretty soon. Here's BA. As Dale mentioned, this one's also been compressing, consolidating for several months now, holding inside of its key range. We've actually had this one long a couple of times. This was the first time down here, retested, and we were just looking for a 317 to 339 play. And then over here, I mentioned the rounded bottom, and if we can get above 342s, we can squeeze. Earnings came out, and that kind of broke that down, and it's still having trouble with 339. It's just kind of barely holding above it right now, but this thing has been compressing for some time, and it's kind of like the broader market a little bit here. I think eventually this can release some significant energy. Here's RH. So RH right here, pushing up to highs right now. It pulled back into the trigger zone here and bounced a little bit. The only thing about this one is it's at resistance already, and typically speaking, I'm looking for fades at resistance. So we've already come from way down here, forming that range. We get earnings and it pops it up to here, creates support off of 85s and rallies, and now that's a long way that it's come in a while. I mean, this was 2.5 months, and it's gone from 75 to 105, and now it's starting to show a little bit of just some profit taking off the upper end of this candle above these recent highs. This is about as high as we've gone here recently. When we tried to hold above it, it failed, created a head and shoulders type of pattern, and so this is a big time level. And so normally speaking, I wouldn't be looking for a breakout here. I'd be looking for signs that it's showing rejection, which could open up a return back down. So this one's just not in the right spot, but you can definitely see that it has the potential to break if it really wanted to. I mean, it built up some energy here, it got a break, and you can see how the market has been going higher. This is a good buy, and if it can get above 105s, then sure, this thing can go. Normally speaking, I would be looking for signs of rejection at resistance, unless you push through, and then at that point you look for defense opportunities. So I think we're still kind of in the range here. I think 105s is still very, very significant. And if there's a rejection at 105, I could see us coming back to 85 very quickly. So coming right back into that zone, and perhaps just trading between 85 and 105 as the new normal. So those are some thoughts there. And that's not to say we can't get above 105. It's just it's got to prove it. And right here, you can look back in time. 105 level has been resistance for many years here, right? It's the upper end of this distribution. So that's kind of where we're at. 85 to 105 is the range. We tried to hold below it for a second and failed. I think we could probably stay in this range for a while longer, just like we did before. So, but look at this down here. We had it down here as well as a range that had formed very nicely in breakout, defense, and look at this thing climb over the last year from 40 up to 105. That's pretty significant. So quite a bit of action here for this one. Thanks for bringing that one to our attention. Here's VSH. Oh, I guess it didn't register. VSH. Yeah, VSH has gotten a big breakout move on the earnings there. Looked like they beat by a couple pennies, perhaps forward guidance as well. This one's been pretty bullish. Right back to the HVN here. Yeah, not bad at all. After this, I would probably, this almost looks like Chipotle here, where it's gapped up to value and now it's just going to chop between 21 and 22 perhaps. But that's been a really nice move here where it built some energy, popped up, and ran. Yeah, outside bar, you're right. That's pretty strong. Last time it got to this zone, it kind of got stuck in here a little bit, so I'd be watching this HVN. That's quite the tail there. That's a huge Saber Corp. That's a huge tail. It's also at an LVN. So let's mark the LVN real quick. CLVN at 24. Sometimes when you have such a wide or long tail like that, I'm usually very cautious about the super long ones like this if I'm going to engage it. This one had several days where it's run up to reach the midpoint. 1, 2, 3, 4, 5, 6 days. And that usually gives too much confidence and a head of steam for the bulls to really, for the bears to really come in and defend. So that one might actually be breaking to the upside above 24s, which could open up as high as these 27s, 28s, the upper end of the value on this composite. So that 24 is going to be very interesting to see if it can hold above it or what happens there, because that's a big time level right there. Oh, Oxy, yeah, look at this one. That's been a huge mover right there, Oxy. This one has moved incredibly well. I mean, we've had it on the board here for a while, and it's followed some of the others in the group as well, but this one has a mind of its own, taking VPOC bid and rallying right to 78s. We talked about 78s being important, and man, took a gap up on earnings and kept running through 84s now. Yeah, that's a super bullish one. 84 is major CLVN in the charts. You can see the clear error here between 78 and 84. This is something that's important here with regards to market structure, where you have, you know, this level here, this level there, you know, a little bit of action in there. Here's value, and here's some lower levels, right? It compartmentalizes these levels. This one went through fast, came back, double time. But now it took 2 days, this day and then a big gap up this day, to run through this zone. So not well traded in here. Hasn't traded there in 2-3 years. So usually I would think that it's going to come back and retrade through 78 and 74. Sorry, 78 to 84. So I would think that usually it'd come back and fill in this zone. If it holds above 84, then that would be extremely bullish, and it would double time to the next area. And that's kind of what, you know, happened over here, where it just big time push up, which was kind of significant here and here. It pushes up here, and usually it would come back and kind of build and then go. Instead, it went double time to the next one and then came all the way back across to retrade through it. So I'd be cautious of 84. If it can't hold that level, we might come back to 78 and fill in this zone a little bit more. That's been quite a mover, though. Incredible. VLO. This one has been super bullish. And again, pulling back to the 8 period or below it has been a ticket for more highs in this one. So thanks for bringing that up again, Dwayne. This has been a very bullish one, where we came out of a neutral range and rallied huge. I mentioned before that we were probably only halfway through with this move, and 117 was the next one up, and here it is. So I mean, we got the big push up to here, which was the 108s. And then we also had 117 as the next up, and we're almost there. We're pulling back into and below the 8, and that could lead to another round higher. So again, when you go sideways here for 2 or 3 months, you're usually going to see about a 2 or 3 month rally. And so, you know, this one might be coming in toward the end of its move, but there could still be a little bit more upside, at least to 17 and perhaps a little beyond that zone. So this is another short-term pullback buying opportunity for this one. Not bad at all. That 91 half strangle was incredible. Straddle was incredible on this one. Big old breakout. SI making its move back down. Great call out there on that one. That was a great one, Dwayne. You were talking about the potential rejection up here that was developing here, and you can see how it came right back across that range, continuing to stay between 16 and 1685. Very, very nice. Great call out on that one. Nice move right back across the range. That's pretty good. And then the open below the mid, and then the rally into the mid. Like, it had all the various things and components that you'd like to see for that one. So that was a great little move there. Good job on that one. a quick update here. We're getting a pullback into the 14s and a little bit of a bounce here in the ES. That's exactly what we're looking for. Didn't quite get down to the 6,900 level in the NQ, already showing a bounce, but we were looking for 14, which could open up 29 to 32 by the end of the day. So that's the zone right there. 14 just hit, and we're already seeing a bounce up to about 16, 16 half, 1675 now. Again, the idea on this pullback low, just to get to the 75% target for the day, would be 27.75, and then of course the actual target zone between 29 and 31 could be ahead. So this is a nice little bounce here already, and we'll see how much more juice this one has. But so far has a 15 handle day. It's been averaging 31 points per day on a 10-day basis, 26 points per day on a 5-day basis. So if we just go average over the last 5 days, we have at least another 11 handles of range. So if we take from this high right here, just call it 20 to be even, and add on 11 more handles, that takes us to 31. That would be 5-day average range, which again is 26 points. So we're starting to see, you know, how this thing lines up for a potential push higher into that area, and 14 is very, very important to continue to hold. Good precision touch on that one. Fell just shy here in the NQ, not quite getting as low as 69. Got into about 69.10s, bouncing, almost back to highs already. Now again, if you're somebody that's looking to engage this on a short-term trade opportunity, a day trade or a scalp or whatever, the entry zone 14's right. Say you triggered 14 and you're using a 2-point stop, right, or 8 ticks, or maybe you're using as much as 3-point stops. The idea would be that if you're using, say, 2-point stop, when price goes up a couple of handles in your favor, look to scale. Look to scale. And if you scale half the trade at that point, you can keep your original 2-point stop and now have a break-even trade, because you've taken some of that risk off the table. You've paid yourself on that first move, and now whether the trade hits your stop loss or not, it's a break-even trade. It doesn't really matter now. You have that. You've freed up that emotional capital. You've freed up the fear component of your trade, and now you can just let the trade play out. Additionally, by scaling out, what you can do is also look to add back to the trade at points that seem appropriate. So if price pulls back and starts to form a failed new low, that could be an opportunity to re-enter a portion of what you scaled out. So it gives you flexibility and an upper hand in the trade. So that's always a good way to go, and it's going to be more and more important to scale as we head into the summer. In summertime trading, you want to look to scale more and more, because you're going to start seeing a lot more chop type of trades. You're going to see more trading range type of markets. So, you know, the market's going to go in one direction, then perhaps come right back in the opposite. So you want to be able to scale, especially as you head into the summertime trading. So right now, I think this one's still looking like it has a good shot to continue higher. Bulls just have to continue to keep those 14s bid. Yeah, let's take a look at gold here. It's a good question here. With regards to gold, are you wanting gold to pull back to 1306 before considering a short, or could the entry be somewhere between now and 1306. Absolutely. It could already be, this one becomes a little, if you didn't get in already, right, then the idea is the pullback leg. Where's the pullback leg? And you have one that's already played out this morning, and so the first pullback of the day here is an opportunity. But then this could also be a digestion day where it's sitting here around this value level, and you could still see a pullback, say a failed new high tomorrow, and that right there could be the, an even better trade opportunity or entry. So you could get in anywhere. And also you got to recall that with gold, I mean, there's many different ways to enter this market. Doesn't have to just be short futures. So you could already be looking at perhaps a call credit spread that you could be selling the 1300s and just say, hey, over the next 5 or 10 days, 8 days is the expiration for the next contract, and 41 out. If you did a call credit spread, I mean, you could be looking at selling the 1300s, and that could give you a bit of a credit there, depending upon what you choose or whatever the case is. The other thing is, if you wanted to sell outright, I would love to see price pop up to 1300, fail above this high, and that failed new high would give us a great entry there. If price doesn't do that, obviously, sometimes scaling into the trade. So scaling in a piece today, say like a half the trade could be scaled in today, half could be scaled in tomorrow. Or it could be scaled in thirds, today a third, tomorrow a third if there's a better price, etc. So I think anywhere into as high as 1300, even a little bit higher, but I don't know if you get all the way back to 1306. But if you get anywhere between 1295 and 1300, that's kind of a good sweet spot. The midpoint is always a good spot. That's 1301 half. So anywhere in that zone would be ideal. But remember that the idea is this thing could drop easily into about 52s, which is right here. And sometimes that takes a little bit more of either energy or a pullback to really drive it into that area. So I'm still watching to see if we get a little bit more of a pullback or a failed new high before I commit on this one. But that's a pretty aggressive transition day, so I think the odds favor at least 50s with a shot to see the recent lows. So again, watching 1300 for a pullback. This is the recent low, right? So I think there's still better entries that could be posed here, but scaling always helps as well. So if you scale a third at this point, just in case, if price pulls back, you can add a third, and then you can add a third on the race and continuation, something like that. So there's many different approaches here. I'm going to hold off one more day and see how that see if we can get a pullback into this zone here. Bitcoin just can't do it. It's really struggling here. Failed new high, a push and a close below the midpoint, a drop. Not really holding 85s at all, so 75 becomes the next major level. And that's kind of the last line of defense for bulls here until you're actually just going to wait for lows to be hit. It really needs to perk up, and this one just has not shown any kind of get up and go. Here's the YM. The YM hit the FOMC key level from March 31st and then pulled back here. You can kind of see again, are we at the upper end of this range right here? Yes. Are we going to fail and come all the way back? Or is it going to try and transition and go to the upper end of this zone here, which is 25.8? Which area are we going to? And so far they're looking like they've pulled back here. Again, this pullback could try to get some bulls in for the continuation, or that can fail and start us back across. I still, for some reason, am more bearish this market. Not by a whole lot, but I'm like 55% more bearish. 55, 45, something like that. Just because, you know, you're rejecting that high, you're at an edge, FOMC key levels offered. This is your range right now. It would take extraordinary efforts here to start pushing this thing up. And instead, when it went up there, it sold off. And now, if there's any failure, any failed new high, any lower high rejection or something like that, that could easily start to dump this thing right back down. So again, we're at a very iffy and critical point in the charts here for a lot of these. ES looks very similar. In Q, RTY, this one is at highs. And remember, this one's already kind of leading the charge to the upside, which means it could also lead the rejection. So with this one pushing up near highs, you can see these are the highs, right? It pulled back. We talked about that being usually a buying opportunity, and it's on this leg where if it rejects those highs, here we go. So RTY has kind of been leading that effort here. We'll see if that leads to some sort of action here. That could be quite a pullback to 1554 to 1548 if there's a rejection up there. Again, you know, you have to ask yourself, do you see the market pushing and breaking out to new highs? You know, does it get above 1620 and just start to run? Does it do that at the end of May heading into the summer? You know, usually it would be, the answer is no. Usually it's not going to break and run at this time of the year. That doesn't mean it can't. Anything can happen. Anything can happen at any time. You always have to know that. Anything can happen at any time. But I think odds would favor that any test of 16 or rejection there, odds favor a return back down. Value is an easy target at 1548. And then the lower edge of the range is down here around 1500. So, I mean, that could be a 100 handle drop if this thing rejects up here. So I'll be watching RTY for early signs of action. And speaking of that, we can also look at IYT, the transportation average. 2 minutes until oil. This one can tend to be a leader. And you can see that we're basically at the upper end of the range right now. Another pullback. You know, does that lead to a drop back toward 182s? Or do we start to break up and trade between 195 and 207? You know, that's something right there that could happen. But again, what's the likelihood of that happening? So very nice boxy trading action here for IYT. Oh, here's QQQ. Oh, a little bit of a wick up there. Thanks for that one. So the wick right here, oil in under a minute. Let me pop over there real quick. So remember, this one has been in a super tightly coiled range. Here we are with a huge push up right now, right away. Looks like the oil came in at a looks like a draw of 1.4. The expectation was a draw of 1.4, and the previous was a draw of 2.2. So we came in right at the forecast, which is quite a bit different from last night's API crude oil stock, which came in at a build of 485. Yeah. So if we did, here's a CL. So I did mention 68.75 to 69 could be a great long entry zone for this market. And the question here is, do you think that level would be a snap rejection if it is going to rally up to 72s? And yeah, I think if it were to drop down into this zone, I don't even see it dropping that low, really. I mean, maybe I could see it breaking below the multiple day range by some degree. Maybe not quite as low as 68.75 to 69, but it could be, say, 69.50. Here's the previous month's high. So it may not get that low. That would be an optimum area. I think whatever it were to do, I think it would be a one-day rejection. So yeah, I think it would drop down there by the end of the day, close back above by some measure, and then from there start to really push and try for the 74s. And you know, this one's been really tricky. You know, we've had the direction on this one easily, and they have done lots of shakeout legs over and over again. It has not been easy because everyone does know the market's heading higher for the most part. And so when everybody knows it sometimes they make it harder, right? I mean, over here we had it long and we were looking for that target. And instead we were looking for a move up. What happened here was we got the nice rejection, everything was perfect, then they ran the stops and then closed it, and actually closed it below the low, and the very next day they ran them up. You know, and then over here, how many times did they had to come down there and shake and shake and shake, then another shake, and it goes up. So I mean, it hasn't been super easy. Over here, a nice little thing, then come down, take it out, and boom. It's been a lot of games here. So I think that instead, you know, you have to just hold a price level. What's the level where everything just kind of matters? And it's like this zone right here. So if I get in on this one, there's not going to be any shakeouts here. Just kind of hold on and let it play out. I think that would be a great entry. I don't know if we're going to get that low, but again, that would be great. I think it would be a one-day type of rejection and then a follow-through. So 72s has such a significant LV in the charts. I mean, look at that thing. So when it breaks through, it's going to just crush it. It's going to be a one-day move through it, probably into 73s. Yeah, sometimes entries can certainly be hard. Sometimes they're easy and sometimes they're not. And again, I think when everybody knows what's kind of happening here, I think that's where they get harder. Because now you got to shake out, now you got to get some folks out of the market and all that stuff. Clear out some overhead resistance. So 1, 2, 3, 4, 5, 6 days of sideways, very narrow price action. I think if it were to break down first, it would be a gift. Here's TiVo. TiVo with a huge tail. Below 13s here, pushing higher, up about almost 4% today. Just kind of pulled back some. It was over 4%, 3.64% up right now. We were talking about this one being a 13 to 15.45 type of trade, and then a shot to see even much higher. Here's Macy's. This one might be done on earnings. You can see right here, beat by 5 or 6 cents. We had it long on this day. Off the 27.70 LVN, midpoint retest, midpoint. Here's a failed new low, held for 3 days and pop way up to 33s. got right into the target zone. So from this low, that green dotted line, project higher, the 75 and 100% average monthly range over the last 10 months, and you get a high probability target zone. And that's what we were shooting for here, was rallying into that zone. You can see it hit it, and today's the day you take profits, and that move is probably done. Now, based off of this low and that high, if we get back to 30.53s, we now have ourselves a new key range here that we could pop up, and that could give us some really good expansion targets down the way. So this one's been not bad at all. Hit our targets. This is another one that we put on the same day as Macy's. For this one, the idea was, for this one to push higher toward recent highs as well. 1950 was the LVN and that key level. You can see here, this is what I like to see. If you're going to look for rejection tails, it's one thing to kind of just have a rejection tail, say, at support by itself, and then go. That's great, right? Drop below the key level, close back above it. That's a great one. It's another thing completely, man, crude oil is starting to run right now, to have a rejection tail take out multiple day lows and then close way back above it. That's a shakeout type of phase, and that's the phase that happens just before something like this happens. It's just like the BABA trade we talked about, right? Like those types of opportunities. So a failed new low and a big time pop up. So again, from that rejection low to this rejection high, that could lead to a pullback to the midpoint. That could give us 2086, and that gives us a new key level. So again, this one hit the target, and the way that we're looking at targets again is by using average range. I mean, it's just very simple, straightforward. From that low of the month, if we project higher, average monthly range over the last 10 months, this would be your 100% target. That's 75% of average range right here, and that's your high probability target zone, just like the Macy's trade. Boom. And those are the last two ones we kind of posted on the trading room chat. We posted them May 11th, and again, that's two good ones there that just popped up really, really nicely. And the things that were really good about Macy's and AEO is that they formed these rejections above significant LVNs. That one and that one, major LVNs. I mean, that's you want to lean on LVNs, and that is exactly why. Really, really nice move there. Some of these doing pretty good still. So Amazon, Netflix, all of these we had long on these days back here. Same thing with the BABA. So that low, and you can see how they popped up with earnings. Netflix, same type of thing. That low, not beautiful, but 2-3 weeks later we're way up. Baidu, here's that low right there. Popped up immediately and rallied. That's a great one. Remember, we talked about selling the put credit spread on this one as well, and we were looking just for a move to 260, but look at this thing push through 260, reaching 278. That's pretty significant there. DVN continues to run. We had it long on this day right here. Broke up, pulled back and held it, and continued. We had 38s as a quick target, and if it can get through 38, we had 45 as the next one up. So it's making its way right now. A great failed new low right here led to a little bit of a push higher. We had this one long since here. Pullback phases have been bought. This one's gone a little slower than I anticipated, but it still has gotten as high as 35.74. It's not bad. Here's Tesla. We were looking at Tesla the other day from the 310s. The idea is from 310 we could get back toward about 280, 275. 3 days later we dropped as low as 280, basically holding down here at these lows. But again, price is right there inside that range. Makes for a great little range here. Nvidia back below 250. Yeah, this right now is continues to just chop. Remember we talked about the 5-day profile here? So this profile right there, this is the value area, and that's only where we've been trading right now. That's it. That's why I mentioned earlier we have a compressed value area. When it's compressed like that and chunky, it tends to stay in that zone a little longer. So right now seeing a little bit of a fade. You also see right here R3, rejection above R3, and R3 is flat, VWAP is flat, S3 is flat, so you're looking to fade those edges. Just prior to the report, price was below S3 and bounced to value, then to R3. Got above R3 and failed back down. Pullbacks could be sold into this zone and perhaps back here. So it's just trading the value area on a 5-day basis right now. And look at today's profile, D-shaped profile inside the value area of the 5-day D-shaped profile. Oh yeah, this one is gearing up for major movement. Major breakout. So the idea here was that the ES could bounce off 27.14s for a shot at seeing a move into as high as the 29 to 32 zone. So far this thing has bounced, gotten as high as about 20s here, 20 even, so that's been a pretty decent little bounce. And again, the flow is still to the upside. Same thing with the NQ. Didn't quite pull back into the pullback's buy zone of 69, but got close, got to 69.10. This one had 55 to 60 handles of room to the upside. So the target for the upside was 55 to 60. 69.55 to 69.60. So still more upside here. You can also see how VWAP is sloping up, R3 is sloping up. That all tells you to continue to look for further bullish trending activity. You're not necessarily looking to sell R3s, instead you're looking to defend pullbacks even as deep as value, VWAP. So everything turning up a little bit right now. Quick reminder, I will be out of the market on Friday. I think we're actually heading to Houston Thursday. I guess that's tomorrow already. It's been a whirlwind. It's been a wild week. I'm telling you, it's been wild. I'm running around like crazy over here. Lots of balls in the air, lots of different things, lots of good and bad things happening. Just have to work your way through them all. But we'll be heading to Houston for the funeral. And then we got a phone call yesterday from my daughter, Mia's kindergarten teacher, and she gave a phone call to say, hey, we really hope that you're here on Friday morning. Mia's going to be recognized for academics out of all of kindergarten there in front of all of her peers and everybody for on Friday morning, and it's like, oh man. So she's getting an award on Friday, which is really cool. She worked her butt off, and we might not be able to make it, but I really need thanks, Max. I mean, she really has. You know, her teacher was very excited. She really wanted all of us to be there, and man, it's tough. I really, she's still going to be recognized in front of everybody, whether she's there or not, but it'd have been really nice to be there. I still hope we can. It's just we'd be missing. Anyways, it's just a lot of different things in the air, but she worked her butt off. She earned it. It's a pretty nice award she's getting. So she's really excited about that, but hopefully we can make it. If not, that's all right. We'll see. Let's see here. Nice trended behavior here. So still just kind of going up here in the markets. Again, this is a market here where there's still opportunities in both directions that are playing out, but still mostly to the upside. I mean, even with the market, you know, the broader market being sideways on a larger scale, it's still flowing up in a shorter term time frame. And so we see lots of opportunities that are doing pretty well. I mean, even TiVo, like right here, is up 5% today and climbing. Roku's up 1%. Shopify's been really nice. Again, look at this right here. We talked about Shopify right here. The reason I liked it is because it's really good rejection tail, good size, and it also took out multiple day lows. Took out that low and that low and that low. Almost got this low and then closed all the way back above. You know, it took out multiple day lows. That is significant. We've seen that already. This is one of my favorites. You know, this is huge. Look at that move there. And when one market does it, there's probably several, and that's why there was several on this day that kind of did that. Several over the last couple of weeks, they've had lots that are doing this. And that's a really strong directional move there. I mean, when you look for something like that, those are the trades that you can really jump behind and kind of lean into a little bit more, right? So a lot of times I talk about scaling into trades or scaling out of trades. These are the scenarios here where you lean in a little bit more. Sometimes go 1.5% more than you usually allot for a trade. You know, you can really get into a little bit more there because those are the ones that really have a lot more potential. Not every trade opportunity is created equal. The ones who really deserve, you know, more capital and more risk are the ones that look like this. I mean, it's incredible how strong that type of pattern is. It can really lead to some signal. I mean, here it is, failed new low, and bang, just a huge move. Those are the ones that really I like to trade. And we haven't seen many of those lately, but when you see it happen, there's probably odds favor. There's probably several of them that have done the same thing that day. So there'll be lots to choose from. Oh, thanks, Dale. Very thoughtful. Very thoughtful. Yeah, she you know, it's funny, she's incredible, the little one, because she absorbs everything around her. You know how little kids are. They really just kind of pay attention to what's going on around them. And so when I'm coaching up the big one hard, I'm really tough on the older one. Like I coach her up pretty tough. Like, not that I'm mean or anything. It's just like coach her up tough. In anything she does. You know, when she's doing piano practice, I'm like, hey, it's not about how long you practice. It's about deliberate practice. It's how you're practicing. Now she's on swim team. It's like, hey, I was watching those last 15 minutes there, and I think you could, you know, and I'm coaching her up, and you know, and the small one just listens. She just quietly listens, and oftentimes you don't even think she's listening. She's in the background doing some kind of weird yoga poses, all upside down. It looks like she's playing, but her ears are open. She's just listening. And so she had been going to that school with her sister for 3 years before she even got into kindergarten, you know. Every single day she'd go to that school. So she knew all the teachers before she even got there. She knew all the older kids before she got there. So she comes with a lot of confidence. And, you know, for a kindergartner, man, I never really saw her as a kindergartner. She just, she's got a lot of confidence. She's very smart. But then she's also, you know, she's got her own personality. Super sweet. She can be sassy. I like it. She's awesome. They're both incredible. But her older sister is fearless. She'll try anything and everything and has confidence that she can do it. And so the little one sees that and she feeds off of it, which is incredible. It's incredible. I can't even imagine what it's going to be like 5 or 8 or 10 years from now. Yeah. And I already told the big sister, hey, when you get to middle school, you're going to have an account and you're trading. That's going to be your summer job is going to be in here. So she'll be in here trading as well. Here's 6J. This is one that Dwayne had us on the right side of here when we were watching it on the transition day. We didn't know it was going to be a transition day. You know, it can either be a transition day or by the end of the day, if it closes up here, it ends up being rejection. The midpoint in either case is always that barometer, that litmus test on whether it's going to be what it's going to be. In this case, it was a transition day, which turned our attention to selling, a pullback into the trigger zone, which was here. Finally got it and then started to roll down, pull back again, and boom. Now yesterday was a stop run day below 2-week lows, and then today it's defending it from below. So all systems are a go for this one to continue pushing toward 90.12. Again, based off of market structure. That's something I cannot stress enough. Is you know, I remember pulling trades a long time ago. And you pull a trade off, you get in, you're very confident ahead of time, you pull that trigger and then you get in, and all of a sudden now you're at risk and the market's moving, and you know, you start to get a little nervous. Uh-oh, it's going against me, or what's going on here, and then you don't really have clarity sometimes, and then you get out prematurely and then the trade goes in your favor, and it's like, you know, and all those mental games that can happen. And so what I try to do is, instead of playing those mental games, I try to go based off the odds and the probabilities. You know, the probabilities are what they are. And sometimes you're going to lose some and sometimes you're going to win some. But if you go based off higher probability trades, you know, more often than not, they're going to play out in your favor. And when I base my probabilities off of market structure, I can really count and depend on market structure. I know that this is market structure right here. That is the structure. And I know that if this price pushes above that high and it can no longer hold it, odds favor it will go to this level. It's not perfect. It's not every single time, but I mean, odds favor that. So you can stick to your guns and know with clarity that it's likely to go there. On this transition day, odds favored that we were going to likely go to this level, which is the bottom of the prior distribution before this one, right? Odds favor that. So again, never wavering in this idea that we were likely going to 90.12. And again, we could still turn around and go this way and not get it, but because again, anything can happen. You know, some kind of geopolitical event can happen, some type of thing can happen, and then all of a sudden these currencies go wherever they go. But for the most part, odds favor that if you're going to break down below this key range low or that market structure low, you're going to come back to that level right there. And when you have that clarity and that confidence, you know, you're more likely to just let your trade play out toward that target. That doesn't mean throw your risk management out the window. It just means, you know, you're more confident in what's likely to occur, and you just lean on that. And so again, this thing is still showing signs that it's heading to 90.12, and that was a quick target. Now, if it breaks below that level, we have much more below. But again, first things first, I think that 90.12 is a big time zone. I think once it hits that level, then we're probably going to bounce and maybe build out a little bit. But a little bit more to go here in this one, and that one continues to push toward its target. Looking at my sell list here. Remember, we were looking at this FANG for a sell, but then earnings came up, so I held off, and then it got a little hairy up here, and then it dropped quickly 2 days running. If you look at this like in a higher time frame chart, which I have off to the side here, this is what you see in the weekly chart. You know, you have an ascending pattern. Everything's been pointing up. But then last week was so hairy, it pushed above the 35s, that 34.52, hit a high of 37.44, and then closed way back down here. Closed at 123.17. Here's the midpoint, which is right at the previous month's high. And here we are this week, coming into that zone 130 and showing some initial absorption. You know, with this type of opportunity, typically speaking, after a rejection up there, I'd be looking for a drop, perhaps back to 105.66 or at least 112.50. So we're still in the range. At some point, I think we still break to the upside, but if this thing can't hold 112.50, I mean, it could drop all the way to 85. That's how significant this type of weekly rejection is. That's how significant that is. You look right here. This is the same type of behavior right there. It usually happens at the top end of a distribution. This is the same behavior right there. Came up to those highs, failed, closed. This one opened above the mid but then dropped. Eventually, bang, right down to the bottom of that range. So again, I've been watching this FANG very closely here for a while, and looking off to the side of my screen, I saw that the weekly chart had quite the tail here. So again, if we can't stay above 130 or can't get above 130 here pretty soon, I think at the very least 112.5 could be ahead. And if we can't hold that level, oh, watch out, because we could be headed much lower. So again, 130 right here. We could still see some action around that zone. Today's not done. Tomorrow's not done. Friday. So we still have half the week to continue to develop this weekly bar. But 130 is the level to watch here, because that's the area that bears are trying to keep offered. And if they can keep it offered, 112.5 might be the next target down. Oh, thanks, Dwayne. Dwayne mentions here, I didn't have much regard for your ADR ideas until I began to understand it was all about probabilities. Now the ADR targets seem very sophisticated. Yeah, you know, same thing. I mean, sometimes I remember when I first started trading there, I would talk to floor traders and pro traders and fund managers and developers and all kinds of folks, and folks that had much more experience than I did. I mean, I was only a few years in, and they would, give me ideas like, hey, try this idea, or I tend to feel like this works and this works. And when I would hear those ideas at first, I was like, that seems way too simple. It seems way too simple, and I didn't want to hear simple. I wanted to hear fancy. I wanted to hear something that not everybody knows about. I wanted something super sophisticated sounding, as my approach. I wanted some, and while there is some of that to what we do, I mean, there's a lot of sophistication, but at the same time, it's very simple, and it almost seems too simple to be useful, but at the same time, it's not. I mean, it's just based on the odds, based on what tends to happen. And that's why, like yesterday, the market's dropping, it's going to keep dropping, but if we get a bounce back toward VWAP, odds favor is going to form a range at the lows. Doesn't mean it's always going to happen. Just the odds favor that in this scenario. And so when the odds favor that, you know what to look for and know how to position yourself in case that thing happens. And the same thing with, quantifying volatility, quantifying price action based off of ADR, being able to just forecast a quick target based off of a low, based off of a high. I mean, those types of things. I love the simplicity and I love what's behind it. It's just, and again, what really led me to like these ideas, because I've coded literally thousands of indicators, systems, strategies, and stops, and everything in between. I've coded so much. I've tossed a lot of it because it didn't work, or didn't work well enough, or didn't have good enough stats or odds that I liked. And then the stuff that proved to me that it was worth it is what stayed. And right away, this one, ADR concepts proved themselves right away. Especially in terms of just looking at statistically how well did it work and what was the odds of reaching X, Y, or Z. That's all I needed to know is data. Input in equals, the output. Good input equals good output. I was all about the data and the stats. And that's what was so important about the early portion of my career, is that when I was working at Nirvana, they gave me all the tools I needed to start building and testing. A strategy toolkit that I can just start building, testing, trying out in the market, building, testing, trying out in the market. And I was able to see very quickly what worked and what didn't. I was able to build upon what did work. And, it gave me a real, just kind of a good mental framework, a good knowledge base on what to use and why. And again, that helped solidify my confidence in those techniques. And that's why, if something's happening, I have more confidence that this will play out. And even if it doesn't, the odds favor it would, but not everything's perfect. So, I love simplicity. I also like making difficult concepts easy to understand and digest for myself, which I think helps for most folks as well. But yeah, I miss those days of really digging in and building, but I don't really have to do that much anymore because I have a lot of what I need in terms of analysis and all that. The rest is all about execution, position sizing, and that type of thing, right? Money management. That's right, Dwayne. As an architecture, less is more. So right now, pulling back into 27.14 still. So the ES pulling back, continuing to hold 14s. Just got a failed new high up there, so it's auctioning back down. That's not usually what you want to see in this scenario. Coming up to VWAP, still a big time area that has to be defended. NQ pulling back as well. Everything's still sloping up though. ZB, you're right. It's below the previous month's low right now. You see this one right here also. I mean, gosh, nothing's stopping this one from going down right now. This one's been beaten up so much. Even here, with a major rounded bottom, with a push above highs, even then I was still, you know, hey, this is a good pattern that usually leads to big movement, but the overall trend has been so bearish that I wasn't super excited about it. And then right about on this day is when we said, you know what, the stops are probably coming out now below these lows, because it had been up here defending, but it was being rejected and wasn't going. You know, it's context clues in that point, and then the stops come out. Then it pulls back, and you can see some more development, defense, and just a drop. Nothing's really stopping this. I mean, it's been pitiful. Very, very bad. I feel bad for my neighbor. My neighbor, he's a older, retired gentleman. He was a former youth pastor. And he was so excited about his portfolio because the bonds were doing so good. And then all of a sudden he's like, well, the bonds aren't doing that good anymore. And they haven't been for a while. And he's just like, well, there's nothing I can do. It's not like I'm going to switch to stocks at this age. I got to keep the balance. So they'll come back. But when? These things are just going down. That's quite the move. Oh, this is a really good question by Dwayne. Really good question. When you add back after T1, what do you do with the stops? All at the same price, move to break even or better? That's a really interesting question because I tend to do several things. I think number one, the first thing is, you know, when you add back, you just have to make sure that if price goes against you, you're not taking a winner to a loser or a break even to a loser. And so I tend to, at times, use the add back as its own trade. And so if I add back to it and price pushes higher, I tend to scale out of that add back along with the T2 or at the next target zone. So I tend to almost use it, primarily speaking, I tend to use it almost by itself. So an add back is kind of a quick opportunity to add back in and then take that portion off and just let the original amount run. Now it also depends on how well the trade's playing out or which type of trade opportunity it is. If it's an opportunity where I'm super bullish, then I'll add back and just keep it as part of the overall trade and look to see where the average exit would get me at a break even. So kind of, as you mentioned, kind of making it all the same price. But whatever the break even would be is where it would kind of be. But for me, usually, well, I would say if it's intraday trading, if I'm doing an add back on an intraday sense, usually I use that add back as its own little portion and kind of scale out of it by itself. So it would have its kind of own stop and then its own T1, and then at that T1 I would just kind of take it off. So it's kind of a quick add back. If it's a swing add back, then I'm looking to kind of put everything together to where it's, you know, the risk is either break even or better. Hopefully that makes sense. So if it's an intraday sense, usually I'm using it as its own little mini trade. And then if it's a swing basis, then I'm trying to make sure that if everything were to lose, I'm still break even or better, whatever that price might be. kind of getting quiet here in these markets. Crude oil is definitely quieted down, trading basically 71s right now, which is 5 and 1 day VPOC. Flat line on the VWAP, flat R3 and S3. We might see a move to one of the edges, and then it could be a fade right back. So not a whole lot of action right now going on in crude. Yeah, good point there, Sonny. ES with a 9-point range since the open. Perhaps summer's already begun. Absolutely. We could see it by the way that the ADR values have dropped significantly. And I mean, remember, it wasn't but a few weeks ago where we're trading 60 points of range per day, and very, very quickly here the 5-day average is now 26 points, and right now we're trading 15.5, including overnight. And so, yeah, I think we're already making that way toward creating summer type of trading ranges, and that's why you're seeing a little bit of quieter action right now. I think we could be well on our way to summertime trading, which means 15.5 points of range is what we have right now. That might be the average if we're lucky in the summer. I've seen these things get down to as low as 9 points a day of average range. I think it was even as low as 5.5 points of average range, including overnight, back in December. I mean, that's how quiet things were at one point. So these can get super, super quiet, and that's where it gets really boring at times. But yeah, I think right now we're still winding down in terms of daily range. All right, well, if this thing fails to hold 14s here, I think we rotate back to 27.04 half, and that could provide another bounce opportunity. It's got to keep that area bid for continued upside. I think overall everything's still trending up, but remember, the market's not in a high volatility state right now. So very, very quiet here. Price pushing back into the 27.14s, just below VWAP, popping back up yet again. This time NQ actually tested VWAP for the first time since pre-market, also going bid. So the trend is still quietly higher, but very, very quiet indeed. So that's right, Sonny. Never sell a dull market. Absolutely. That is still the saying, and it's still quite viable. Yeah, this is not one right now that is very exciting, especially when you look at something like crude. I mean, this one is clearly just treading water here, just kind of coiling up. Again, with this one, it's coiling up so much and it's compressing within that middle portion of the value area that a major expansion is coming pretty soon, one way or another. I think if it goes down first, it's a fade up to the upside. If we start to break to the upside straight away, then I think we have a pretty good shot of working through that 72. So if you look at this, this almost looks like what the NQ looked like on a daily chart perspective before it broke to the upside. Got really compressed, and then you see one big old day that'll start to just run. And it could start with a failed new low, down here, and then just start to run and close much, much higher. That could be significant. Yesterday, remember we talked about this yesterday also. You see that impulse sell-off? Boom. It hit this low, bounced back up, and I mentioned that's the range for the day is probably in. The range for the day is probably in. And again, it's sometimes when you have a major impulse move of this magnitude, that was a major sell-off from the recent high back to the close and then bounce back up. That large impulse sell-off was created in order to set the boundaries for the market. It sets the high, it sets the low, and now price can just chop inside that zone. it builds energy, and eventually expansion will be significant, and we can start to use this key range to identify targets. So let's do that right now. I mean, there's not much else to do here in terms of action, so I'm going to go ahead and mark this so that we have it ready to go. And it's not a perfect key range by any means. You know, an impulse sell-off followed by a bounce back to the mid, usually you want a pretty sharp, aggressive move until you find a low, and then you want a quick bounce back to the midpoint. You know, this wasn't very quick, but it got there, and that's the mid. So we'll go ahead and mark that up. So the point is, it's not perfect, but it doesn't always have to be perfect. This is good enough. So right here, that's the high. Let's go ahead and mark this. Let's go draw. I'm going to use Fibonacci Extensions, and then from this high, which is 92, this low looks like it's 42. Let me mark that up. I don't think that's exactly right. Let's get sometimes my info boxes. That's the one thing I need an info box here to see what's what. Okay, so the high here is 71.89. Then you have the low 70.42. Yep, 70.42. And then 71.15 or so. So let's go over here and let's make that 71.15. I like to label the current. Okay, there we go. So that's kind of the zone and the range that we're looking at. If I were to put this into, say, a 5,000 volume bar chart, that's the range, right? So we could have used that high to this low and back up. We can also use this move. The goal is, you know, after you see a move, you're going to get an impulse move that sets the edges. And once you do that, it gives you major targets to watch for. So if we were to break to the upside here, 73.40 would be the quick target based off of this breakout. So if you take a look at this just in terms of like any opportunity where you have an impulse rally, then sells off back to the mid, and now you have a neutral range that forms. Neutral would be between the middle 50% of that range. So that's the middle. Here's the upper 25. There's the lower 25. That's the middle half. This is the upper 25. That's the lower 25. This is like VLO. VLO formed this in the daily chart, and right now we're somewhere up here. And it was straight away. VLO is the perfect example, right? You don't see them perfect like that all the time, but that's the power that can happen when you do have that type of behavior. So this right here is building energy. Again, because I am bullish crude, I know that down here would be my ideal area to watch for strength or a push. So if price were to break down first, say it drops into the 25% lower expansion, forms a box, and can't hold below the low and starts to pop up, that could lead to a breakout to the upside. So because I'm upward, I have an upward bias, the best area to buy on the chart would be down here below this low. That's the best area to buy. Again, we may not see that area, but we know that if price were to break down tomorrow, we know that I'd primarily be looking for a trap because the market's going up. I'd be looking for a trap below this low, and if that trap occurs, usually you come back to the middle and the top. And then if we're ready to see expansion, Here's the 50%, here's the 100%. So now you're looking at 70 and as high as 73.40 just based off of this action right here. So it's about 3.5 points of profit potential from 70 up here, and then of course we know that 74.52 is the larger swing target, which is a little higher, right? So that's how I kind of plan the trade for this idea. Plan the trade. Because right now this is the planning phase. There's nothing really to do here. It's just building energy. But we can plan for ideas. This is an idea I would love to see. We talked about before that it can get as low as 68.75 to 69 and still be a great swing trading buying opportunity. So even if we were to drop lower, this is the 100% expansion from this target. That could still be an opportunity to watch for a bounce and a continuation. So those are the two swing entry zones that I'm watching for crude. And again, if this were to break down, you would just have to judge it as it goes. Maybe it comes down to here instead and starts to form and then go. Who knows? It may break a little bit below 70. So we'll have to judge it as it goes. But if it breaks down, this is about as far down as I'd go before looking for a buy. This is as early as I'd go. And anywhere in between, be looking for some sort of rejection. And that could get you headed much, much higher. Nothing says we have to break down first. Instead, we could easily break through this high, come back, and start to hold and continue. And so those are the types of opportunities I'm looking for out of this. But it's very, very clear right now. We're in compression mode. We are compressing. We're waiting on something. I'm not sure what the market's waiting on, but this could be big. So this is one to continue to keep your sights on. For expansion, we have a very narrow 6-day range. And using ADR, let's quantify that real quickly here. If you look at the higher time frame, here's CL. Here's the 5-day range. You can see how narrow it is compared to average. The current 5-day range is not done, but right now it's over the last 5 days we have a range of $1.66. The average 5-day range has been 3.5 points, 3.41. So whenever we are ready to see expansion, we're probably going to see a move of about 3.5 points over the next 5 days. Not only that, you can see right here, this is the 125%. So when you get compressed, you tend to see price push until it turns blue. Usually. There's the waves of movement. The waves of movement. We're down here, the waves. Now the waves. So 3.4% is just average. Or sorry, 3.4 points is just average. We would actually see more than average if this were a breakout, because you'd see expansion and aggressive movement. That could put you as much as 4.25. So somewhere between 3.5 and 4.25 points is what we would see over the next 5 to 10 days. That's pretty significant. So again, if we drop down first, reject, we can then project from this low about 3.5 to 4.5 points up, and that would be a good target for us. And so this is something that I think is building out very nicely. I'm looking for that to play out, and we'll see when we're ready to see expansion. Here's MAR. Yeah, MAR right now holding off the midpoint here yesterday, pushing to new highs. This one has been very, very nice overall off the bottom edge of this key range. Boom. Another one here. Here's a multiple day failed new low. So you can see multiple day failed new low here. And right now 1, 2, 3, 4, 5 days of compression. You look down here to quantify that. And as of right now, we're trading 2.8 points of range. That's 41% of average. It usually has about 7 points of range, 6.91. So 5-day range breakout. We could be looking at a 7-handle rally out of this range just to get to average. Remember, when we break out of this narrow pink phase, we usually go to the blue. We turn to blue, which means we go above the 125. The 125 is currently 8.6 points. So at the very least, I think this thing is compressing significantly. Above 140, opens up 145, and as high as 148. So this one looks pretty significant here as it continues to build out. That's a good question right here with regards to OSTK. Right now, I am more considering a bullish option strategy rather than a neutral one, like a straddle. I think a straddle would be great because I think there's going to be enough volatility to cover that and continue. But I think this has more of a bullish tilt than a bearish. And the only reason I think that is because we're below 50, below the bottom edge, and we didn't quite get the 50 we're holding. The other thing is right here, after this major squeeze, we've held the midpoint and the top end of the range, and that's become absorption. So to me, it seems like this was the rejection, and now we're absorbing higher lows modestly. I think that all flows to the upside. So I'm more considering an upside push. If I really didn't know, I mean, a straddle would be great as well. And you know what? I could price out a straddle as well, because a straddle becomes really nice when you can buy it in a low volatility environment, right? This has clearly been a low volatility environment. So if you say you were to do a straddle, and I think, you know, also you have to consider where the strikes are. You know, that's why I think I was looking at a straddle just to price it out earlier. This one right now, if you go out to June, say 30 days out, the strikes are every five handles. So you're either doing a straddle at 35, which is here, or you're doing one at 40, which is here. And so we're close to the 40, right? Now 40, we'll see what we can get from there. Let me see here. I was just going to look the 40. Yeah, that's a pretty big debit, 6 1/4 at the current price for a 40 straddle, which means you need to get above 46.30 to start clearing and making money. And again, the first level target would likely be 53.75. I think that would be a high probability target, is 53.75. And then over time you might see 65s, but I think 53.75 is a quick first level target. So you would just have to kind of clear the 46s, and then it's all profit. I think in this case signs are pointing to the upside, and so I'm considering more of a bullish strategy, like say a 40 and 55 or something like that. That could be a vertical. You can go 40-50 or 40-55 and let that play out. I would put a little bit more days to expiration as well. 30 days out is the next monthly, and then from there it gets too far out. I think September might be the one after that, which would be about 128 days. So we're working with like a June expiration on this one. So that's something to consider right there. But I think this thing is focused more to the upside. Oh, there you go. Max talking about a strap straddle with 2 calls, 1 put. So that gives you some directional bias. That's a pretty good way to go as well. Yeah, that's a good way to go. It gives you some directional bias. And then if you do it off the 40, again, you're a little out of the money right now, which probably means it'd be a little cheaper as well. So just a couple things to consider on that one, but I think this one's built up enough energy that I think it's closer to seeing expansion than we were before. And I love the way that it just continues to hold precisely below the 41.79, which is the key range low. And we know that as soon as it pops above that level, the midpoint is a dead giveaway as a target, and then from there it can make its way to the opposite end, which is 65. So I think there's a pretty good shot to get up as high as 60, 65, but I think the first level is about 53.75. And RTY looking good after the buy yesterday, off the pullback. Very strong today. Again, with this one, I'm very suspect. And so this, while this looks good, it looks really, really nice. This is exactly what you want. I'd be very curious to see how price responds to 1620s. If there's any failure, because right now it's a decision point. It's a decision point for this one. We are coming up to the recent highs. It's either got to go or it's got to fail. That's why I love the edges. And we'll know pretty soon here. And I'm more of the opinion that we're likely going to rotate back down to value. But when? I think it's on this next flow where we may see some rejection. We could even get up to 1625, 1630. You know, start to give a little bit more into this portion up here and then pull back. I'm not really gung-ho right now, but it's looking very strong, very bullish, and off that pullback, that's been pretty nice. Not bad at all. All right, everyone. Well, I'm going to go ahead and call it a day there. Let's see how this thing plays out heading into the rest of the session. Again, I still think there's an upward bias to the market. We've gotten a great little push higher here just recently off of VWAP. Our idea to begin the day was if this thing can hold 6,900 in NQ, we get 55 to 60 as a target. And if 14 can hold in the ES, we get a target somewhere between 29 and 32. So I think we're still headed higher, still have more upside. And for crude oil, still mostly sideways. So watching for that one to see expansion at some point. All right, everyone, have a fantastic rest of your day. We'll be back at it again tomorrow, last day of the trading week for us. And then we have a great long weekend and be back at it on Monday. So everyone have a fantastic rest of your day. We'll be back at it tomorrow. Take care, folks.